And we like to say that um, access to finance is the foundational sector for all other sectors, right? For someone experiencing poverty, inequality, money is the unlock to access to health, access to education, access to good business growth. So we really feel that today's panel is really critical because we're asking this question of, is AI really going to make a difference, or is it just hype or hope, right? And I think we read recently that one sort of financial institution actually managed to use AI to parse something like 20 million voice calls into 100,000 loan offers, which is sort of math that would never exist without the AI world. So it's very clear that there is some potential here. But today, we really want to double click across all aspects of financial inclusion. We're going to cover, is it important for payments? Is it important for access to credit, access to insurance? Is it important for driving access to small businesses beyond just individuals? And we're also going to tease a little bit at this subject of, is it really going to actually create self-driving money, right? Where I don't even have to think, I'll have an agent and the agent will run my finances. We want to even get there. But let's build up there today slowly. We're going to talk about where India is, the comparative role of AI. We might even be a bit provocative and ask, is it even that important, right? So we have an incredible panel here today. We have Lipika Kapoor from Nabu Sciences. She's a co-founder of a center based that came out of MIT, I think. And Anjani Rathore, head of digital for one of the nation's largest banks, HDFC. We have Sohini Kapoor from NPCI, and we have Yogesh Agarwal from NVIDIA as well. So maybe we can start with you, Anjani, and tell us, India's not starting from scratch on financial inclusion, right? So can you kick us off by telling us what's the real degree of financial inclusion across the country? Where have we succeeded? Which cohorts, which products, which technology has worked, and what problems are still yet to be solved? How would you frame that?
Thank you, Kamya. Good morning, everyone. As far as India is concerned, we've made some good strides in financial services over the last several years. If you look at 2008 to 2017, in financial services, especially with the advent of digital public infrastructure, we've made good strides. But let's double click here. Financial services means a lot. If we get into Save, which is mostly account opening, we've done really well. Um, More than 85% of citizens in India have a valid account which is operational, and you can save using that. At the next level is payments. Again, UPI, and Sohini is here. She can talk more about it. In payments, we have really galloped. We are today at a scale of more than 500 million transactions a day, and it is growing. We account for more than 50% of digital transactions today globally. So that's a thing to be proud of. But if we go beyond this, which is beyond save and pay, then comes the borrow part. And there, while we have made good strides, but still it is a lot more traditional in nature. We look back, what is the history, what is the transaction pattern of a citizen, and then offer a credit facility. This is more like driving a car looking at your rear view mirror. But you're driving the car in front, so we have to do a lot more there. There is too many digital signals available now within the country, and it is possible now to get all those signals and create a credit pattern which helps you do underwriting. So on borrow, we have some way to go. And then comes the other ones like invest, where sachetization is a big change. The more smaller we go, it becomes more inclusive. There is a lot happening in that direction, but still a lot more stride can happen in that direction. And lastly, protect, where if I'm the bread earner and something happens to me, I fall sick for 10 days, how do I earn? How do I protect my family? That is another area where we need to do a lot more. So on the first two aspects, we've done fantastic, A+, and on the others, we are somewhere in the middle. We have a way to go.
Yeah, no, that's a very helpful kind of framing. Yogesh, you're an AI native. Maybe you can tell us from the AI perspective, how do we, think about the layers through which AI can really transform any sector, and BFSI in particular, from the AI world in, rather than from the financial world out. How are you looking at
Thank
this?
you. Happy to. I'm actually going to answer that question by directly referencing Jensen Huang, our CEO. He was at Davos just a few weeks ago, and he basically said many of us think about AI at the level of a model like ChatGPT, Gemini, DeepSeek, and so on. But really, truly, AI is a five-layer cake. And so the first thing you're doing is you are actually, with AI, you're converting data into intelligence. And the first thing you need is energy. Energy is a very precious source right now, and we are constrained on energy. So that's the first thing. The next level that you need is GPU computing, which is what NVIDIA provides in a big way. A layer above that is systems and infrastructure, which can be provided by a cloud provider. It can come from server players like HP, Dell, and so on. But that on-prem or cloud infrastructure is the third layer. A layer above that is the actual models, right? The chat GPT and Gemini and so on. And then above that is the application layer where you take these models and then create the economic impact that Anjani was talking about and so on, right? So those are the five layers we think about. And at NVIDIA, what the way we approach it is we have created a full stack platform all the way from hardware to the middleware software to the application layer to cater to it. And specifically, if I give you a global view, we operate in financial services in three key segments. The first segment I'll talk about, actually in India, we don't do much, is our biggest business today comes from what I would say is capital market firms because they are less regulated and they see AI as a competitive advantage and they are spending hundreds of millions of dollars to essentially replace the work of a quant researcher with deep learning. So that's the first trend that we see. In the second segment for us is banking, where essentially our view is every single function in a bank, whether it's risk management, customer care, whether it's loan processing and so on, will be agentic in nature. And third is payments, where we have applied things like graph neural networks and now increasingly transformer-based architectures to essentially enable quick detection of fraud, but also hyper-personalization, right? So that's a quick overview for you from our lens.
No, that's really helpful, Yogesh. I think the goal then for financial services will be to think about, okay, which parts of this do I take, which parts of this do I build, and which parts of this do I buy, right? So maybe Lipika, you can come in here. You're a former banker. You're now running an AI startup. How do you think about the ways in which, like, if you have to give everyone here a mental model to think about the ways in which AI can meaningfully drive financial inclusion in a context like India, where you actually have so much diversity, so much scale. Everything that's true in India is also not true in India, right? So how do we think about it in this context for financial inclusion?
Right. Thank you so much, Kamya, and thanks for having me here. It's a great pleasure to be on this panel. Um, I would say we can think about that in like three ways. I think, firstly, I think influencing the backend models, like how do you, so AI is already making strides with credit underwriting, risk models, modeling, all of that, and as well as like fraud detection. And it is doing so by using alternative data sources now, whether it's like your UPI payment history or the sales that you've made through that. So I think being able to use alternative data sources is helpful to build the backend intelligence, which is like an important layer in the financial services. And I think that also allows to bring a lot of the frontier models which have been trained on the west side of the world, and it allows to convert those from formal towards informal sector as well. So I think that's one aspect of it. The second aspect is more on the front end side, how the voice agents or the multi-language models, especially like Bhashni, it's trying to
Yeah.
come up with 22 different languages. So I feel on the front end, being able to access, being Like, just imagine a farmer trying to figure out something, and if they can just speak to their phone and they get a response in their local language, I think that's pretty meaningful and powerful. And lastly, I would say it's the systemic intelligence that gets built as more and more information flows onto the small language model that gets created, because it's essential. Like, data privacy is important. So I think the system itself learns locally for the people that it's building for. So I think that systemic level intelligence, it adds to the model layer, and I feel uh, so all of these three together, I think, are really transformative way on how AI can contribute towards the financial inclusion piece.
So back-end analytics, front-end access, and specifically language, right? It's a good framing to think about as a financial services provider, how you can kind of reuse some of this. But Sohini ma'am, coming to you, you're an operator in this space. NPCI has been credited with a lot of inclusion even without AI, right? Usually via sort of the digital public infrastructure approach and that thinking of building the networks. But can you drive us a little bit more into specifics and tell us, what are the most powerful one, two, or three, use cases that you've seen, especially in payments to start with, maybe Hello UPI or some of the others, where you've really tangibly used AI at scale to drive inclusion?
Oh, thank you very much, Kamya, for that question. And good morning to everyone. Very happy to be on this panel. And I think some of the foundational or the framing that the my fellow co-panelists have done, I have the good opportunity to bring all of that together with this question, Kamya, at least on this first one. Lipika spoke about small language model. You were talking about, Yogesh, about some of the how NVIDIA is trying to build through those 5 layers, and what can NPCI do? Anjani, you touched a very important chord about saying in that entire financial inclusion journey, yes, you can have save and transact, but there are all these other frontiers left for us to capture. If you look at from an NPCI's perspective, and specifically for UPI, which is our flagship product at NPCI, I think the framework has always been about three important things, right? It's about scale, it's about inclusion, and it's about innovation. So I think scale, in any case, you spoke about, Anjani, you spoke about, we do actually now about 700 million transactions a day. And I guess more than half of the world's real-time payments on a daily basis actually go through UPI. But even with that level of scale, I think it would be a very far-fetched statement to say we've achieved inclusion. We are actually far from it.
Yeah.
So I'll talk about two important things that we are talking about, or what we are working on at NPCI, to ensure that the scale does keep stretching and we get to a level where we all feel confident about the actual impact of inclusion. Yes, about 500 million people today have access to UPI, but we need the next 300 million also to come into the UPI fold. And that's what the team at NPCI is working on. And a couple of innovations that we have looked at there is to expand the reach of UPI, right? Yes, everyone sitting in this room might have smartphones, you have access to networks, you also understand, most of you would be able to understand the English language, that is the medium of our conversation here. But there are our fellow citizens who would not be that privileged, right? And therefore, what we have developed is two important products. One is called Hello UPI, which is voice-based. And voice-based not just in English, but in 10 languages. And at NPCI, we are working on ensuring that we keep improving the accuracy and keep increasing the number of languages and the number of use cases. So everything that you can do on your UPI today, and there are lots of functionalities, on that voice-based, we have currently made 10 functionalities, the most important ones. Like, I could pick up my phone and actually say, Kamya ko 100 rupees bhejiye. And I could do it. I mean, I only know English and Hindi, but I know this is possible in 10 languages, so you could be able to do that. And we are going on increasing the accuracy of that, so that when I'm trying to send money to Kamya, I don't end up sending it to Lipika. But that's the work that is happening on Hello UPI, not just on apps with a voice-based option in multiple languages, but also for people who don't even have a smartphone. So you might not have an app, but you can call a number, and actually through the voice space, it's not about press 1 to do this, press 2 to do this. Again, use your voice, call a number, and be able to do transactions. So that's the 1 2 3 pay that we have done on UPI. We've taken that one step further to say inclusion is not just about having a smartphone. There are more smartphone and social media users than there are people who transact digitally. But it's also about expanding the circle. So we've got a product called UPI Circle, which can ensure that you can delegate the payments. You can delegate the payments to people in your circle, whether it is your children, your older parents, your house help, anybody else that
Yeah.
you could want to delegate. We took that one step further in the in October last year, and we said you could delegate this not just to people, but you could delegate to devices, and in line with the theme of this conference, you could delegate it to AI agents. We are running a closed user group pilot on that with the approval from the Reserve Bank of
Fascinating.
India.
Yeah.
So that's where on the innovation side
But ma'am,
we
if
will
you'll
do it.
permit me to push you on
Yep.
one point.
Yeah.
See, feature phones has been possible almost from day one
Yeah.
on UPI,
Yeah.
right? But we haven't really seen the transactions take off.
Yeah.
Is AI going to make the difference?
Yeah. So I think yes. And I'll tell you why. Again, it's about how do you make there are two important things when you look at why UPI has grown the way it has grown. I think it's got obviously all the technology, the scale, all of that is right, and we built it in a modular way that it'll work in the Indian context. But the most important thing was it is super easy to use, and a consumer can implicitly trust the transaction. Today I live in Mumbai, and if you get into an auto rickshaw there and you pay somebody and you get off, the guy doesn't even wait for you to say whether the payment. There is a implicit trust, and
Trust.
when
Yeah,
someone's
yeah,
scanning your QR, the payment is
yeah,
happening, right?
yeah.
So when you look at the feature phone based payment, I think there are two important things. One is you have to if you made it all with press one for this, press three for this, on a small feature phone, you're trying to press three, one gets pressed.
Yeah.
So
So
that
voice
ends up,
is the differential,
voice
you
is the
think?
differentiator.
Yeah,
Then you have to build on top of that trust layer.
yeah, yeah.
So the accuracy, and that's where the AI models, I think, that's the next leap. So we will be able to get to that level of inclusion with AI.
Well, that's inspiring. I
Yep.
hope that that's true. Anjani, coming back to you, payments is all very well and good, but credit is the holy grail of the financial sector, right? Credit is aspiration, access to a loan you couldn't otherwise access. That's the dream. So, do you think, practically speaking, are people really using AI to drive credit, or is it just in the annual reports and not getting implemented on the back end? How are the banks really thinking about this, and what do you see as you look around?
So AI is being used in credit. It is discriminative AI earlier, and now generative is also coming into play. The essential difference is this. Earlier, we used to take a pattern of a customer, what you've transacted, what is your kind of cash flow, and use statistical models to run and find out whether you will be good credit or not. But now it is possible to get multiple signals which are coming in from alternate data sources. So if you are a small milk farmer in Gujarat, it is possible that whatever milk pouring you are doing at your society, that data comes in, and we have the ability to underwrite how many cows you can get. And this is actually happening today as we speak
Wow.
within the bank. So this is alternate data. This was not available earlier. It is available now, and we are able to do credit underwriting. But let's take this to the next step. We make UPI as a source of payment, and we pay for our electricity bills, for our water, gas connections. If I've been paying consistently for my house, this data is also very valuable. Today, we do CPV, which is customer premise visit, for a lot of credit which is given. And this can be done in a much more smarter manner without even visiting if we have the trail which is available. So it is possible to get a lot of information now and analyze that information to ascertain the credit that can be given to a citizen. That is point number one. Point number two, earlier, digital was largely about information technology. Out of a country of 1.4 billion, as you can see today, while the smartphone penetration could be about 800, 900 million, but how many people even text and chat? It's about 600 million. The entire focus of digital has been on the top of the pyramid to this 600 million. It does not go below that, because this is the population which is more comfortable with texting, with typing, with talking. When we go below, then the challenge comes is, how do you ensure that that person has a trust in the system, is able to interact with the bank or the lender who can be an NBFC also, to take a loan. That is the big challenge, and that's what we have to solve. I could go into any country. When I walk into a washroom, I just see a sign and I'm able to make out where to go. But it doesn't happen with financial technologies. When you want to take a loan, you want to take an insurance, you need to be smart enough to understand what is written over there. And this is where generative comes in a big way. It helps us simplify that interface. When banking started, we started with branches. It was more touch. Then we moved to phone banking. It was talk. Then we moved to internet banking, which was type and tap, mobile banking and net banking. But with generative, we are again going back to talk. But this is 24 by 7. This is available on your device. You are able to interact with lenders and ensure that you get this product that you're looking for. This is a big change. The interface which is happening and the signals which are coming in, both put together, it is possible to extend the envelope of lending which is happening today. You spoke about one example, but there are several such examples which are available. Not everybody is coming out right now, but it is happening. It will reach a tipping point soon.
Yeah. Now that's exciting to hear. But I'm curious, I love this framing of sort of touch talk type. I think a very cogent articulation of kind of the progression that we've seen. But Lipika, maybe coming to you, I think we've seen this is sort of for the individual, right? Let's say you're applying for a personal loan, you can talk through, finish the process. Are there any additional complications for small businesses when they're trying to access credit? Does AI hold promise for them as well? Because they are the growth drivers of an economy. You really need to, one of the big focus areas of many governments, to be able to create jobs, which is another worry about the introduction of AI. And so how can we counterbalance that? Is there hope here?
So for small businesses, again, I think because I think again depends on the context of geography that you're talking about, but I think here, I think in India, like um, most of I think there are like over 500 million plus people in the informal sector. So I think at the individual level or at the business level, when people are trying to access credit, right? So I think uh, they may have been like good citizens where they are actually doing all the right things, paying their utility bills on time, etc., but somehow they have fallen out of the system. And I think in that case, and I think as Mr. Anjani was just mentioning, I think the alternative data, I think, becomes like absolutely essential. And for small businesses also, like the SMEs or the MSMEs, I think for them, I think it's also important to think about like the accountability, like the proportionate accountability, like when someone is using AI as like a chatbot, right, versus when an AI is being used for an underwriting model. So I think one no to someone, I think that makes a big difference to them. So I think what kind of proportionate accountability we assign to each of those situations, I think matters. And I think that's um, where I think the training of the SLMs or the small language models, I think, becomes essential because um, because I
Because
think
you're
you're
trying to, yeah, go ahead.
yeah, no, because I think essentially what is important is that it is connected to what is available from the SMEs, and then the models are able to match that.
Yeah, no, makes sense. I think obviously when you're a small business, you do have slightly more complicated KYC, slightly more complicated payments data. It's a little bit more fragmented. So maybe one of the ways that we can frame it is, yes, the small language models will deeply matter. You'll also need your data infrastructure to be kind of strong as well, which makes sense, I think. So maybe Yogesh, coming back to you, how are you thinking about credit specifically in India and supporting? What are the opportunities that you see in India for BFSI? Maybe you can come in on that.
First thing I'll say is India is a priority market for NVIDIA. And the reason is NVIDIA is a platform company, and a platform company depends on developers. And India has about 800,000 developers that build on our platform. So that makes it number one very important. There are about 4,000 startups in India that build on our platform. That's another reason why it's very, very important. There are three areas I would say in the BFSI segment, some of which have been touched on, but I'll just give you my own color. The first one is payments, which you very elaborately articulated, but I'll just speak to our collaboration a little bit. The 700 million transactions per day that you're talking about, to build trust in the market, you have to detect that fraud in milliseconds. And so that's where NVIDIA's fraud detection blueprint, the work we are doing with graph neural networks and all that, will be very important. And the future that we are working there is to use transformer-based architectures, because what transformer-based architectures do is they give you an embedding around which you can understand the whole context of that person and also do personalized offers, right? So that's the big area. Payments is a big area. In banking, the opportunity, as our fellow panelists have suggested, is India is language first, it's voice first, it's mobile first. So building these multi-model models which can understand text, speech, video in Indian languages will be very, very key. So our point of view on banking is the following, and I'll just give you some examples from US as well. Our point of view is a bank needs to build some foundational models for risk, for customer care, and so on top of which the various solutions can get created. And that needs to be done in Indian languages and so on. And that's, so we are already working with a regulator here where they are using NVIDIA's open model called Nemotron to build a finance-specific large language model. We are, the same regulator is building a multilingual chatbot so that citizens more broadly can have access to banking and so on. We are working with another large bank here to transform customer care. But I'll share one example from outside India where one, to your question of like, is AI real? One of the banks is Royal Bank of Canada. They have automated equity research with a multi-agentic solution that is deployed across 8,000 traders. And essentially, these agents automatically analyze SEC filings and then can figure out trading signals from
Wow.
their own.
No, you're doing a
And we
great
announced
job.
the financial model for India yesterday
Oh,
in
cool. Yeah.
Yeah,
NVIDIA,
absolutely.
NPCI.
No, I was gonna say, you're doing a great job of pitching NVIDIA, so
Yeah.
everyone's very happy to hear. But the question I'll ask you is, cost of GPU
Yeah.
is cited as a really major barrier. So are you doing discounts for people trying to save the world,
Yeah. So
or
I have,
I think people
unfortunately,
will thank you for asking that question.
so thank you for asking the question to me too. I have to educate you on the economics of GPU computing to answer your question. Okay, so you should never focus on on the cost of the GPU. What you need to focus on is what is the work that you are trying to do, and what does it cost you to do the work with an alternative technology versus when you do it with GPU. So, for example, I'll just give an example from an energy standpoint. If you run an LLM model using CPU-based infrastructure, you may need 1,000 servers or so. And there's energy that goes with it. When you do that on GPU, you use only 1.2% of the energy. So you have to focus on that aspect of it, which is important. With every generation of GPU that we launch, our focus is only on two things: improving the performance per dollar and improving the performance per watt. So for example, with our current Blackwell products, we reduce the cost of inferencing by 1/10, or cost of token generation by 1/10 relative to the previous one. So we are actually bringing the cost down with each
all right, that's
generation.
good to know.
Yeah,
Because you're going to have no shortage of volume. So
yeah.
we'd hope that, it reaches the scale that it can. But Sohini ma'am, I mean, are you going to buy these expensive slash well-priced GPUs to drive access to credit as well at NPCI, or are you sticking to payments?
No, so credit is really important. I think, when Anjani framed it very well in the beginning to say true financial inclusion cannot be measured just by scale. Um, yes, we can celebrate our 700 million daily transactions. I think the day is not far. It's not a question of if, it's only a question of when that we will cross 1 billion digital transactions in a day. But the real question is, so what? So what happens? What is the actual outcome in the lives of our people, in the economic well-being of our society, and to the GDP of our country, because we have so many digital transactions? And yes, it has been a very powerful force, but there is still a long way for us to go. So to your question, yes, we will need to buy some of the NVIDIA GPUs. He's done a very good. We do hope that your public request here makes it even cheaper for us, because we will need to deploy some at scale. But credit on, and turning that transaction data, that flow data, whether it is for individuals, whether it is for SMEs, into access to affordable credit is really important. And in fact, we are working a lot this year. It's a very big focus for us. The government and the regulator are very supportive to say, how do we ensure that credit is not just about, many people here, when you think about credit, you might think obviously about the structured loans like your home loans or personal loans, or in the case of people attending this conference, credit cards, right? But that's a very small part of credit that goes out in our country. I think there are various estimates, but there are between 50 to 60 million unique individuals. That's all who actually have access to credit cards. Formal credit, lots of MSMEs. There are a variety of studies, but we're told only about 20% of the MSMEs actually have access to formal credit. So we are focusing in a big way on credit line on UPI. And that does three things, which is very important for, obviously people can use the NVIDIA chips and the models to build the financial risk models, and lenders like HDFC Bank and other financial institutions will have to deliver that credit. How do we as NPCI come in and create a layer of on top of the DPI that we have built, so that it becomes, one, credit becomes easily discoverable. So for an individual, they don't have to fill up forms, they don't have to do all of this, going into a bank, be intimidated. But if I have an OD, if I am even somebody who's a beneficiary of a government scheme like a Mudra or a SHG group, or some of the other schemes that the government runs, or an individual who the bank has identified as saying, okay, I might not give this person a credit card, but I'm happy to give a credit line. But the process right now of discovery is very convoluted, it's expensive, it's broken, manual. All of that can happen on the UPI app of the customer, right? So customers can discover credit through UPI. They can then link it. So today, instead of just using your bank account or your credit card, your RuPay credit card to pay on UPI, you can then use your credit line, which makes it easier for financial institutions to actually understand where it is being spent. And the third part, which is really important, because it's okay to say we want to expand credit, credit can grow when there is responsible credit and people pay back. So it will also be easier to use the UPI and other models to, when you deliver credit and discover credit on UPI, to be able to collect back on UPI. So yes, it's a very big focus, and we'll be working with all the various elements in the ecosystem to bring that about.
Yeah, no, I think that's a powerful framing, but um, I'll come to you, Lipika, for in a minute on risks, because I think that's non-trivial. But before that, Anjani, what Sony have talked about, I think it was actually, I'm hearing a lot about data layers, and I'm hearing a lot about DPI, not so much about AI. So do you think that we wouldn't see this AI transformation on financial inclusion if we didn't have sort of our shared DPI layers of account aggregator, of payments, or do you think that it would have happened regardless of the DPI layers?
See, AI is not going to make an impact in a silo.
Yeah.
There is information technology, which Sohini mentioned about, which is being used in a good manner. Uh, this is very important that we get data at one place. This is all information which needs to come together. The next phase that comes in is the intelligence layer. So we have information layer, then we have intelligence layer, as in how do we interact, what questions do we ask, how do we do credit underwriting in a smarter manner. That is the second part which comes in. And the third part is also imagination. I mean, credit line on UPI is a very simple concept, but it was not thought through more than 2 years ago. Just 2 years ago in GFF, this was launched. So something like this is also required. See, we have a pyramid of 1.4 billion people, but if we look back totally, how many people would have taken credit? All bureaus estimate about 500 million at any given point of time is not more than 300 million. So altogether, 500 million people would have taken credit, and at any given point of time, it's not more than 300 million. That number can grow if AI comes into play and makes this interaction easier. So that will drive adoption. The second piece, which is the data layer, is largely driven by information technology. That is anyway happening, but there are more sources of data that can come in. There are more signals, more alternate data that can come in. Land records are getting digitized. There are small investments which are there in post offices. In fact, most and the largest saving entity is post office today. If you look at the number of people who have got savings in form of Indira Vikas Patra and Kisan Vikas Patra, those can be also digitized very quickly or tokenized,
Yeah.
and it can be used for lending purposes. So it can be mortgaged, and lending can be made available on those. So this is imagination. There is information, there is intelligence and imagination. How do we ensure that all three comes together? And even if there is a 30% lift in each of these, forget about how the future is going to unfold, but at least we can see today that there is 30% lift, which is possible very easily with what we know. That itself is going to multiply, across all these layers. So 1.3 into 1.3 into 1.3, we are talking about doubling at least using AI.
Yeah.
Now, this was not possible earlier. If we look at it, 200 lakh crore is the total lending book today available. And at any given point of time, consumer lending in India per year is about 30 to 40 lakh crore. That, if we go by this math, can double up with what we know today. We just need to execute.
Excellent. Those are some solid numbers to put to this, otherwise sometimes fuzzy story. But is it all going to be roses and cherry trees? Lipika, tell us a little bit about what we should watch out for, what banks should be careful about, what regulators should watch out for in terms of the risks of actually using AI too fast, in this space, in a good intentions, right? But sometimes things don't always go to plan. So what are the ways in which we can mitigate operationally against some of those risks to make sure that you really drive inclusion without you know causing harm?
Right. I think a few ways. I think first, I think a piece around like even like how are people learning with AI or like just the AI literacy piece of it. Um, I think as like with the big launch in 2022 with ChatGPT when it became like a household concept, but I think from that point onwards, people have been starting to use AI initially as an advanced Google sort of engine, and then trying to create outputs through that to summarize emails, create reports, or like create pictures, videos, increasingly more and more outputs now. But I guess as you move beyond the outputs and as you're trying to orchestrate like AI into the workflows, and especially like I think within the banks, right? Like to in lending, like it starts from like lead origination to then your credit check, and then ultimately after a few rounds it ultimately gets transferred to the user. But in all of that, I think the experience matters, and the judgment of the consumer and the end user also matters. Like I think when they are told like something has worked in their favor or not, I think they develop a judgment about what AI does for them. Is it good, is it bad? And I think so that's something to look out for, that I think we need to create more and more trust among people who are using this. So I think AI literacy kind of remains an important part of it. And the model is learning, and I think the way it's interacting with the users creates the literacy aspect both ways, because models are learning and the users are learning how the tools are interacting with them. So I would say like that's one.
Yeah.
The other thing is the explainability part. I think it's really important, and I think I touched upon this a little earlier, but explainability for anything that's working or not working as a user for me. If you just tell me, oh, this the expected outcome is undefined, like it doesn't mean anything to me. So if I'm a farmer, or like I'm a local street vendor in Varanasi, I would actually want that someone is trying to talk in my language, and that I am learning and building on that. And lastly, I would say I think being able to account for bias, because the models are learning. There is so much diversity in the data that's coming from India, and I think the models are learning. So there is a need for like ongoing continuous monitoring of the bias that gets created in the data. Could be on gender, geography, caste, income levels, etc. So I think it's important that the models are refreshed from time to time, and the intelligence layer is kind of monitored and augmented accordingly.
Yeah. No, makes a lot of sense. I think the reporting, especially, and model outputs, creating auditability for those logs, having human sort of real layers to raise grievances. Anyone else want to come in on some of the risks or ways that you're mitigating against them?
um, um, Not specifically on the risks, but coming related to a point that you touched, it's really important about what are we using AI for. It's not just about AI for the sake of AI, right? It's got to solve a real problem, whether it's a business problem or a consumer problem. And hopefully, then we get the efficiencies that um, Yogesh, you spoke about. But one of the things that I would like to talk about is about how NPCI, like amongst the first models, we built a small language model yesterday. We announced our financial model for India that we launched, and one of the first applications of AI that we looked at again at the scale was building a small and simple thing called UPI Help, which is in pilot with about 13 banks right now. And the important thing, going back to our customers going to trust it because adoption and scale will happen with that, is giving customers immediate access and the ability to see when customers give mandates, when can they actually just go pause, revoke. This was one of the toughest things, right? Anybody here ever subscribed to something and then figured out how the hell do I get out of this subscription? I'm sure everyone has a key story about that. So the first use case we picked up when we launched UPI Help, which is a small language based model, was to say, okay, give customers clear transparency, the ability. I think about 6.5 lakh odd mandates have been modified, revoked, viewed in the last 3 months that we've been running it even in pilot. And we are working on that model and refining that small language model now to come up with other use cases. So that whole risk is not just about, okay, do you put a human there to understand, but what are the use cases that you're finally going after and building that foundation of trust? Because you can't suddenly have one AI based business model that will on its own just start generating value, whether it's for customers or for businesses.
Yeah, no, I think that's very clear. But Yogesh, just to bring you in here, looking at these use cases, overall, now that you've seen kind of this framing, how important is the financial sector and financial inclusion vis-a-vis, let's say, other areas or sectors that NVIDIA could be chasing? Like, how are we, like, in terms of the scale of impact that you could drive, do you think the financial sector is better placed to drive impact via AI than other sectors? Is that why you're chasing it here?
Uh, I'll answer this question again from an NVIDIA business lens. Okay,
Yeah,
so our
sure. Yeah.
largest business is say cloud providers.
Yeah.
Then comes neo clouds like the core weaves of the world. Then comes enterprise segment, right, which are various industry and verticals. Within that, financial services is one of our largest business segment. So that should answer your question. So the
Yeah.
opportunity to apply AI in financial services is absolutely very, very high. Um, and go ahead, sorry.
No, no, that's okay. If
The
you.
other thing I was going to say was that remember I talked about this 5 layer cake early on.
Yeah.
India should focus on not like exporting its data and then importing intelligence by sending the data out to some model sitting somewhere. It needs to own the sovereign infrastructure across all the 5 layers.
Yeah.
Now, the good thing is under the India AI mission, you already have an investment in infrastructure that is being made. Indian based models are getting built. Now you need to then use these open models and apply your data. The data encodes your culture, your history, your knowledge, your financial norms, and all of that. With that, you build India specific models and build solutions on top. So the entire stack needs to be owned from a sovereign standpoint so that you hopefully then export intelligence and not import that.
Yeah, no, that's a powerful goal to target. But just maybe Sohini or Anjani, if you want to come in on this, do you think that there are specific layers of AI that we should make available as sort of a DPI in the country, like make it publicly available in order to accelerate some of this transformation? Or, have we done enough? How are you thinking about this?
As Yogesh mentioned, there is a barrier to adoption, and there are different layers available. But the sovereign layer is the layer to collaborate. So whether it is infrastructure, it is large models which are available, or data. These are the three things where collaboration is a must because it brings in a lot of efficiency and it allows a lot of new things to be created. And at the same time, because we all are enterprises who have to compete, we should be competing on service and experience. So collaboration is required, and
Mm.
that is the area where whether it is digital public infrastructure or a common infrastructure being set up by the regulator, some of those things will come in handy because that should allow democratization of this technology
Yeah.
in the interest of the citizens. And this is where the real value will come in. It need not matter whether you are a large bank or a small fintech. You should be able to use this infrastructure and data and model and ensure that you are able to offer a better service and better experience. To do that, it will require these companies to also create small language models which are unique to these companies.
Yeah.
And that is where people are going to differentiate and fight amongst themselves.
Yeah. No, I hope we see the outcome of that good competition. One sort of last question before we open it up to the audience is, we're seeing sort of these tactical improvements in financial services, right? Slightly better underwriting, slightly better fraud detection, slightly better loan monitoring, which at scale can be exponential, right? That's kind of the case that we're making. But can we think a little bit more about a utopian slash dystopian future, in which you actually have a powerful agent that can essentially run your money by itself, right? To be able in your interest. And how far away are we from that? Because that would truly be, because truly, I mean, when you're talking about financial literacy, Lipika, that's a huge challenge. And so if you had an agent that could navigate some of the complexity of, accept your risk level and operate based on that risk level, do you think we're far away from that future? Or do you think it's within reach? I want to ask actually everyone on the panel, whoever wants to come in on this.
I'll give you my view.
Yeah.
I feel that anything that you do online in digital media kind of mimics what you do in your real world, like even Facebook. Essentially, if I went to a party earlier, I would call the person, said I enjoyed it, and so on. You do that on the online media now. So now coming back, let's say I'm trying to construct a portfolio, like at a very basic level, you want to have some mix of large cap, mid cap, small cap, REITs, and so on, right? There is some method to the madness of constructing a balanced portfolio. I don't see why I can't teach an agent to go do that over time, right? So that's my view.
So, Kame, I hope it's the more utopian version and not the dystopian one. Though we have to be very careful, like it will not happen on its own. So there'll be a lot of, I would, responsibility that various components of the ecosystem will have to take for that. But you don't really need one single agent doing all of that. And I'll take a cue from what Yogesh just said. Your financial need is not this one size fits all. And it's not the same for everybody. It's not the same for you in your various life stages. So I think there will not just be this one super agent. There's not. It could be you could have your own version of a Jarvis, but I think what can happen and what is more likely to happen is going to be very specific, and there can be any. There's no restriction on the number of agents you deploy as long as you understand the risks involved in it and you are able to monitor and regulate that. So I do not think that is very far away. It will depend a lot on the technology itself is not the tough part. I really liked what you mentioned, Anjani, about the imagination there. So it's not just about the technology, it's about getting the right products and then actually enabling the trust layer. So I can build an agent. Am I going to, like, one of the things which again we piloted was, okay, I can tell my agent, you know, I would like to have moong dal halwa today. Can you go find the recipe and order everything? Is that possible? Technically, it is possible. In fact, we are running small closed user group pilots on that. But do I trust enough that I'm going to put all my card information, or am I just going to say, okay, you can only do it for if the whole thing costs less than 85 rupees? So I believe that trust part is the more important. It's not just about whether you can build those agents today.
Yeah, Lipika?
Yeah, and I think completely agree with what's being said. And I think the only thing I would add is like the AI, when the agents are being trusted to like do so many things, I think the flip side of the challenge to think about is like when an AI agent is making a decision about, a low income customer about whether or not they get a loan. And if they make a wrong decision, I think that's the governance piece. I
Yeah.
think which makes it
Yeah.
really important to, I think, have that side as well while we are orchestrating all the process like through the agents. And I think I do believe in the utopian view. I feel like in our lifetime we should be able to, see agents do a lot of the, automation. But I think we don't right now have the frameworks that are needed for the on the government side. It's in the works, it's in the making. I think the free AI framework that was launched last year in August talks about human in the loop, and at this point of time it's the human who's making the final decision. And I think if we have to switch to agents making the final decisions, I think we just need a little bit newer
Yeah,
frameworks
for
that
sure.
allows us to do that.
For sure. No, fully agree there. We need to open it up. Okay, so we thought we'd allow the audience to come in on one or two questions while we have time. I saw one hand in the back. If we can get a mic to them quickly. Um, the gentleman that's standing. Yeah, he had his hand up first, I think.
Straight question. The cost structure, how would you break it up between cutting off jobs in your own bank and transferring rest of the cost to the consumers? Thank you.
That's a tough one.
What's the question?
The straight question was, how would you trade off between reducing jobs within banks that are offering sort of AI-based services versus not?
See, the good part of this question is that we are sitting in India, where the growth is so much that you continue to get people to manage that growth. So today, if we become more efficient, it is very much possible that something that you are doing is mundane and very simple, and you delegate it to a machine to do that, and move ahead and do something more meaningful, which could be customer engagement, or it could be creating new products where you are using your imagination a lot more. So we are in a sweet spot today. We have a technology which has got tremendous potential, and we should not have the fear of innovating using that, and not restrain ourselves, because the growth in here is right now really healthy, and we should be able to leverage some of this to drive growth.
Yeah, yeah, I love that framing. Very positive. In the front row? Yeah.
Yeah, thank you. Like it was very informative. I learned something very new that voice-based is coming into picture. So my question is around that. So do you think what challenges will come with voice-based transactions becoming common? Because I see that UPI frauds are very common. Do you think this industry will be able to keep up pace from the security aspect from the to the for your voice-based transactions? And secondary question, do you think like how we have evolved from web to mobile banking to now UPI and now voice-based, do you think it will fully replace mobile banking or traditional banking as the other previous channels have done? Or how far along do you see that happening?
So I wish I could actually see that far into the future and be able to answer everything, but I'll try to do to the best of my ability. So, like I mentioned, reducing frauds to a near zero level, it can never be absolutely zero because, there are finally there are people who commit these frauds and they find newer ways to commit those frauds. So the aim is to be able to continue to ensure that you bring it as low as possible. Actually, UPI as a payment system has a very low level of fraud, but at the scale that we operate, even that number translates into you know into large that bips translates into large numbers. And we have to keep getting better at that, with voice or without voice. So that's it's not an either or. Managing fraud and keeping on reducing that is not an either or. And AI needs to, and that's where the training of the models, the ensuring that my voice cannot be impersonated by your voice, because there are all of these fake identities and all of those things that need to be created. So there are, and again, you can use, just like you can use AI for creating the voice based commands, you can also use AI to fine tune the fraud and risk models to be able to detect any changes there. So this is going to be a